Let's just use this one. Hello, people. Oops. Okay, can y'all hear me better now? Man, I don't know what happened to my mic. I think it broke. I don't know. Did I drop it or something? The way y'all were sounding me, so I made the video, right? I made the whole freaking video. And the way y'all could hear me, like it was like, that's how the whole video is. So I'm so pissed off. It's so annoying. But, you know, what am I going to do about it? So I was like, you know what? I'm just going to hop on live and just do it. So, you know, hopefully it doesn't sound that annoying because obviously the the MacBook's like fan is pretty close, but you know, I don't know, you guys know me, I don't go crazy with my videos. So it is what it is. All right, let's get into it. So I found a great stock. Let me see. I'm gonna try something. Nope, that's fine. So yeah, so I found a great stock. You know, it's a great value stock, and yeah, so I'm gonna go ahead and get right into it. I feel bad that I long ass intro for this video, but it is what it is. So let's get right into it. I think I already alerted and shared and posted on Twitter. If you guys could just like and retweet that on Twitter, that'd be great, so you can get more viewers. Either way, the video will be up. So let's go ahead and get right into it. So this is the stock that I came across that I absolutely just love. Like, it follows every single little thing that I love. The value is there, the growth is there, the safety is there, the consistency is there, practically everything is there. And no, I'm not going to show my face, by the way. So you're just going to have to, when I'm talking, you're just going to have to stare at the screen. Just listen to me. Also, can you guys see all this good? Like, can you guys read this well, or is it kind of like low quality up there? You guys can read it, right? I'm watching my own YouTube stream and I can see it good. Here's the 701. I could even read this here. Yeah, all that looks good. All right, great. So this is a stock. It's called Shinnihon Corp. I'm gonna butcher that. Shinnihon Corp, Shinnihon, whatever it's called, right? The little number is 1879. So here it is, 1879. You know, it trades in the TSE exchange. So it is a Japanese stock. So unfortunately, if you do want to invest in this stock, you very well can in the US. You can actually, you know, pretty much anywhere in the world, but you have to you have a broker like Interactive Brokers. You know, that's why, you know, every time y'all hear me live or anywhere, I'm like, you know, my main broker is Interactive Brokers, and then I have TD Ameritrade. This is exactly why I have Interactive Brokers, so I'm able to invest globally, you know. And at the moment, this is probably the best value stock I've seen out there, as far as like, because we see a lot of nets and net current asset value stocks. I mean, look at MSN, look at look at MSN, look at Gigam, you know, all those, but they're dying stocks, you know, or they're losing money. Or we come across stocks like Charles and Covard, where, you know, they're not necessarily trading below net value, but they're decent, or they're not as consistent, you know. So that's the trouble. Well, this one has everything. So here's the stock. So the first thing I want to share is one thing that I love about the stock is where it's trading at. So I love when things are depressed. I love being a contrarian, and I like buying when everyone's being fearful. I like buying when stocks are overall trading low. You know, it explains my, you know, why I like stocks like Dish and stuff, right? So if we look at the stock, you can see that it's pretty much trading at lows compared to like 2017, even 2016. So in 2016, you can see that old resistance. So we kind of scroll back out of here, you can see this little resistance area, you know, is now the new support. And that's practically where we're trading at. We're trading at old resistance. This is a new support level, and we're right at the bottom of this. I mean, you can see how many times it's hit this level. It's actually had like trouble breaking under that. Could it break under that? It can. You know, we've seen lower levels like in COVID, you know, it hit around, that's my dog like coughing in the background or choking, 630. So yeah, so the stock has, you know, seen lower, but, you know, it's at a good level. I love when stocks are trading at these low levels. Like, you know, that's, you know, look at Geo, CoreCivic, Funko, you know, Zora, all these times. What I don't like, so that's one thing that I like, right, that level. What I don't like is when they're trading like this. This is what I don't like. And there's two things that you're going to see here. Number one is that it's pretty much at highs. I mean, look at how high it's trading compared to the whole chart. I mean, it's at resistance zone. It's at the highest the stock has ever been. I know the stock is still growing and stuff. So that's one thing I don't like, that I sometimes I come across great stocks. I like buying them when they're like distressed, you know, when there's a reason why they're down. Like, you know, I like buying it if it was down here, you know, then that'd be more attractive than up here. Kind of like, you know, what we're doing with the stock. We're buying down here, not anywhere above these levels, especially like the median of the last 5-6 years. You know, it looks like it's around $800. Like this whole little $800 range is where it hangs out at. Overall, you know, we're below that. So I like that. The other thing I look out for is the volume. So if you look at a stock like this, I mean, look, we're looking at it at a week, and look at how shitty this looks. It's a bunch of dojis. Like, look at this, how long it took for this whole range. Like, this whole range is like half a year, and it hung around 230 the whole time. Look at how dead it was here. Literally, from 2010 to 2016, it literally did nothing. I would go crazy. So I happen to come across stocks that are very good, but they're this crappy. There's no volume. They're super dead. Now, of course, if you bought this stock in 2012 at 50 cents, and now it's at like $4, you know, it's amazing, but it's a little too slow for me. And that's something, and can you imagine how it looks when we go in an hour? I mean, this is how it looks. You can't even see the graph. Like, that's how shitty it looks. This is like 3 months, and the stock is just going nowhere. So when I find, you know, that's one thing I do is I look to see how it looks in the volume, and I can see that very quickly looking at the chart. If we look at the stock, you can see it's way more active. You know, there's a lot more volume. We can go in an hour, and it looks a lot better. You know, it's still a little bit doji-ish, but you can see that there's definitely more volume. It's a little more volatile. So that's one thing that I really like. So I'm going to go ahead and remove this stock now, just because I just wanted to show that example. You know, sometimes you're like, why do avoid some stocks? It's for those reasons. So that's it, right? That's just that part. Let's start looking at, like, you know, what it at the numbers. So if we go to financials, and by the way, this is the first time that I have ever been using TradingView to look at financials. For some reason, I've always had this mentality of like being focused on TradingView, only looking at like charts, like, you know, like you're charting and like just stuff like that, right? It's crazy. But there's this whole financial side that practically shows everything you need to look at. So I might even start switching to TradingView from other places. But anyways, so if we go to statements, well, first of all, let's go to overview. You can see here, you know, what it says. The current 1879 has a market cap of 40 billion, you know, Japanese dollars. What's the Japanese thing called? It's not yen, yang. What is it called? So you know, I'm probably gonna say it wrong this whole time. So 40 billion Japanese dollars. I'm gonna say that. So if we convert that, you know, 40 billion Japanese dollars to US dollars, you know, what's its US dollar market cap? You know, so 400 billion Japanese dollars, you know, you're looking at around $269 million market cap. So it's trading under 300 million. So like, what is something that I always tell you guys? Like, I love stocks that are smaller market cap. You know, I love stocks that are under 300 million. This one's right in the money. You know, it's right underneath that. So it fits, you know. Again, something else that I like. It's not a $1 billion stock. It's not a 2 billion. It's not at 700 million. You know, it's at a decent, there's enough volume, you know, and it's at a decent market cap. So that's that. Now, if we go into statements, we can scroll down and we can look at the total revenue real quick. So I'm going to switch this to annual because we're currently looking at quarterly. So if we go over to the annual, you can see how well it's been growing overall. So like in 2015, I'm going to zoom in a little bit so you guys can see these numbers better. You know, we were at 78, we grew to 86, 95, 100, 112. Had a little bit of a dip here, 101, 107, and we're like at 107, you know, trailing 12 months. But overall, you can see the revenue here has been growing. So what's another thing that I like to look at is the net income. Like, are they losing money? You know, that's the GIGM, like MSN, GIGM, NOS, you know, these stocks are losing some money, or like Cope. They have like a burn rate, they're losing money, they have negative net income. In this case, this company has positive net income. It might not be the biggest in the world, but it's there, you know, 7 billion, 12 billion, 8, 10, 10, 9, 10, 11. Overall, pretty stable, but it's there. Now, a lot of people might not find that attractive that it's not growing, but remember, we are focused on assets. We're focused on the balance sheet. So now that we're looking, that we saw that, right? We can go over to the balance sheet and we can start looking at total assets. So how have those been growing? How are the assets growing overall? So if we go here, you can see that they went from 85 billion in 2015 to 93 to 101 to 105, 17, 126, and 140. there's very consistent growth. I mean, you could actually see in the bottom, which I love that it shows both here on TradingView, the growth. You know, it grew 9%, 8%, 4%, 10%, 8%, 10%. I think it's fair to say that on average, assets are growing between like maybe around 8% on average year over year. You know, once you get the average of all this, maybe it's around 8, 7%. I'll have to check the number out. So I like that. Now, what about its total liabilities? Like, is that growing at any crazier pace? Not really. It looks like it's gone down sometimes, their total liabilities, and it's like very low. This was on the higher end, but it's not like outpacing assets. And where can you see that? In total equity. So if we look at the total equity, 2015, 2016, it was ranging around 36 to 47 billion. We've gone from 36 to 47 to 55, 63, 73, 81, and 91. It's kind of slowed down, but it's growing. So that's super attractive. I love that it's, you know, its total equity is growing. And you can show this to a child and he can tell you where it could be in the next year. You know, it might be over 100 billion now, and then 110, and then 120. You know, there could continue to be growth there, and it's pretty easy to see that. And you can see the total equity here growth, which we'll talk about later. But that's, again, super attractive. So far, it's passing everything. You know, I like the way the graph looks. I like the volume. I love the market cap size. I love that assets are growing. I love that liabilities are not growing at a crazy amount compared to assets. What about its total debt? So here's its total debt. They had in 2015 and 2016, you were at 14 billion, 10 billion, 7, 71 million, 69. It's decreasing. They don't even have debt anymore. And if they do, it's probably very small amounts. So again, it's not like total debt has been increasing. If anything, it's been decreasing. And maybe that's why net income and like total equity has been kind of low. But now that they don't have debt, where's the money going to go? They're not going to be paying down anything, so it has to go somewhere. It's going to go to the books. So I like that. That's attractive to me. You know, debt isn't increasing like crazy. Debt is not an issue with the company, so I absolutely love that. You can also, if we go to, book value, that's obviously growing. That's pretty obvious. 600 to 800 to 900, 109, 120. So we're seeing growth in that, which is going to follow pretty much the total equity. So I like that. What are other things that I like to look at? Like, well, what if the company is making all this money, but since inception, it still owes half, it's still down. So if we open up its total equity and we open up shareholder equity, we can keep it going into retained earnings. So for those of you who don't know, retained earnings, I've made a video about it, and it's something that I love to look at. It shows you how much money the company in general has made since inception. So in 2015, since the company was built, let's just say it was built in 2010, it's retained $28 billion. So if we continue that, 2016, 2017, from 28 to 40 billion, 48, 57, 66, 75, 84, retained earnings are growing. So the company since inception continues to have positive, money going into it. Earnings are just continuing to grow. So that's super attractive to me. Notice how there's just no issues yet. So that's super attractive. And also, whenever you do the math with certain things, you have to make sure you subtract minority interest. In this case, minority interest, there is none. So we don't have to worry about that on this stock. So that's pretty cool. That's a cool little thing. If it's there, you just subtract it, but that's not an issue there. So that's good. So what could be going on? Do you think maybe there's like diluting shareholders like crazy? Is that what it is? Well, I don't know. Let's go ahead and find out. So here's, their statistics. If we go to total common shares outstanding, here are the numbers. Does this look like they're diluting shareholders? It's literally the same. They're not even buying back shares or diluting shareholders. It would be nice if they were buying back shares, but 58.46 million, it's been consistent. So we do not have to worry about them diluting shareholders. Now, notice this. When we go back to total equity, let's look at 2015 and 2016. Where was it ranging? What was its total equity around 2015 and 2016? I think it's fair to say it was around, 40 billion. We kind of get an average of these two. It was around 40 billion in 2015 and 2016. Look at where it was trading in 2015 and 2016 if we go back to the stock. So here's the stock. Let me go back to the week back here. Let's kind of zoom out a little bit. I'm going to open this up a little more. So this is what, things that I love to see. So here's where it was trading at in 2015 and 2016. In 2016, it even hit a high of over 1,000. Like the rest, literally in 2016, from July to December of 2016, it was trading higher than it is now. So it gives you an idea of how undervalued this stock is, that it's trading at levels where it was at a $40 billion in equity, where now we're looking at $91 billion in equity, yet it's still trading in the same range it was in 2015 and 2016 when it had less than half of that. Does that make sense? 40 times 40, that's 80 billion. We're at 90 billion equity. So that is super attractive to me. Again, that there, in some point here, it just got really disconnected. And again, what have we been looking at since 2015 and 2016? We've been seeing that the stock, the equity, the assets, like everything has been growing. Yet what has the stock been doing? It's been doing nothing but dropping since 2018. So I need to look deeper into it to see if there's anything off there. But so far, numbers show otherwise. The company is growing, the company's doing this while the stock is doing this. Eventually they cross the point where like it's now undervalued. And I think part of the reason we're coming across it around these ranges is because obviously the issue we had with COVID. So I believe this stock was trading way too high when it was at $1,500, so it did become overvalued. And I'll explain more why later, but it became overvalued. So I think it started to kind of snap out of that and kind of fall. And then we hit with COVID, so that didn't help. Maybe it was trying to recover, that didn't help. And then obviously everything kind of slowed down with COVID, and then now the market started to crash. So because of COVID and the market crash, I think it's what has held it down. And it should really be recovering by that time. Like maybe it should have been trading a lot higher. So I like this little wrinkle, this little like wrong thing that we have in the market here. Like that's super attractive to me. So now that we looked at all that, like let's give it a value. Let's look at its net current asset value. You guys could get that pretty quickly, or we can do the math real quick. It's pretty easy to get the math. So how do you get the net current asset value? Net current asset value. So all we have to do is we're going to open total assets and we're going to look at total current assets. We're going to ignore anything after that. So long term, no net property, all this total non-current assets we're going to ignore. So we're going to grab all of its total current assets. We're at 126.92, and I'm going to do the whole math here in front of you guys. So it's 126, where is it? 92 billion. So that's million. Wait, yeah, that's million. That's billion. Wait, 126. 126.9 billion. Yeah, so 126.9200 million, whatever, right? $126.9 billion. So if we subtract all of its total liabilities, so you can see total liabilities back here, it's 48.56. So minus 48.56 billion. 48.56 billion, that leaves us with $78.3 billion. The stock is currently going for 40 billion. It's this stock, the net current asset value of this stock is 78 billion, 78.3. And that's obviously not, going into deeper stuff, but that's just its net current asset value. The stock, if we go back to the overview, you can see here, it's going for a $40 billion market cap. So it's almost a 50% discount from net current asset value, just net current asset value. So that's very attractive already. And if we look at this, let's convert this to a per share basis. So to see like what it should be trading at per share based on net current asset value. So we can just go to, back to statements. We can go back down here to statistics, total common shares outstanding. That's 58.46 million. So if we divide this is what I did wrong in the other video. I did billion. So if we divide this by 58.46 million, 58.46 million, that gives us a per share value of $1,340. So the net current asset value of this stock that does not dilute shareholders, that's consistently growing, that's growing assets, that was paying down debt, that's the total equity is rising, that the stock has been doing the opposite, has a net current asset value of 1,340, and it's currently going for $700. It was at $698. The market's open right now for them. So it's up a little bit, it's up 0.43%. So that is super attractive to me. I love that. Now, Ben Graham, how do we say Graham? People always make fun of me. Ben Graham, he would like the stock to be trading 2/3 of the value. So just to do that, you have to multiply this by 0.6666666666. So if we grab this, net current asset value times 0.666666, the stock is a buy if it's trading under 893. Is the stock trading under 893? It is. It's quite a lot. It's trading at 701 from 893. So that, I love that I'm protecting my downside. Now, the longer you hold a stock like this, because the total equity keeps rising, the higher this number is going to get. That 1,340, it's growing around 10% in equity every single year. So, next year times 0.10, it might be worth plus 103.40. It might be worth around $1,470 next year in like 12 months. And then another, by 2 years from now, if it continues at that 10% rate, times 0.10, that was 1,470. Well, I guess that makes sense. 1,474, something like that, right? You're looking at $1,600, and it's going for $700. So that's really attractive. Now, if we, you can kind of see what kind of return you're looking at if it were to go back to net current asset value. We can go here, go to price range. From the current range, it going to 1,340, you're talking about I can't zoom in here, but you're talking about a 91% return on your investment. And if, holding it over time, we got up to like 1.6 or something. Now you're talking over 100% gains, 110% gains. And I think it's fair to say that stock is going to continue on that trajectory, which you can see the stock has been doing since it IPO'd in 2002. I mean, the stock has, over time, has just kept, look at it, it's in an uptrend. And right now, it's in a wrinkle. I think it should be trading right around this range. And that doesn't even include if it starts trading overvalued. That's just going to fair value, like to net current asset value. Imagine if it trades 2 times net current asset value. Then you're seeing $2,000, whatever yen, whatever it's called. It looks like this opened around 100. It's gone from 100 to 1,400. That's a 10 bagger. So I'm pretty sure this stock is going to continue on that trend. Imagine holding this stock for the next 5 years, never ever paying taxes. And the beauty of it is, I think they even pay dividend, if I remember correctly, which I'm not going to talk about too much. But if you go to dividends, it looks like they even pay a dividends. Look at this. Dividends per share. They pay about 21. For every 1,000, for every 700 that you own, you get 21. That adds up. Now you're getting paid a dividend. Imagine how much you'll get paid in dividend in the next 3 years, plus the stock, how much it's grown in the next 3 years, plus you're not paying any taxes on that. It's a really handsome return. So I like that a lot. Now, that is just looking at the net current asset value. I'm not going to do the math for the other one because it's going to be a little too long, and I didn't want to make this video this long, but I already did the math, and the stocks net working capital, and you guys could do the math, or you can come across, there's certain platforms out there that can share it with you. We're looking at, let me see what the number was. Let me go back to, have it in my notes here because I had already done it. It is net working capital is 822. So we're even trading. It's even trading below net. It's at 8. What did I say? At 822 is the net value of this stock. So not only is it a net current asset value stock, it's actually a net, which is even better, and it's 822. And of course, as you know it, this net is growing over time. I'm pretty sure you can see, if this is it, growing at 10% more or less, because obviously the books kind of change around there, but, over time that net, and you're going to be chasing that. So I think it's a beautiful spot, Could it keep going down? Of course, maybe we do see it hit like 600 or like, 650, but it's, would you be worried holding this stock at the rate it's growing and how it's safe it is, that it's not diluting shareholders? Like if it falls to $600? No. And that's the beauty of buying stocks like this. Like you're in control. You understand its net working capital value. You understand its net current asset value. And could it get bought out? Yeah. I mean, why wouldn't someone look at this and be like, hey, this stock is worth like over 1,300 and it's growing. Why don't we buy this company out? Which is what happened with IO data. So if we go to YouTube and we type in like IO data, here we go, Charlie Marr, like this is one stock that I valued, buy $1 for 60 cents, also a Japanese stock.
Let's go ahead and check.
And this stock got bought out. I don't remember what it got bought out for. I think it was like pretty much right around where I valued it. Like you were buying $1 for 60 cents. And I think it got bought out for like 80% above the value that we gave it. So, and in this one, I went more into detail and I got a little more crazy with it, but it's a very similar story. This one is IO data. It's a Japanese stock. Here's the thing, TSE 6916. I'm going to assume and think, this stock is the next one. Would it get bought out? I don't know, but it's a great stock to hold. Most times I don't like when stocks get bought out because then, it kind of kills your future potential gain and compound and all that. Dividend yield 3.15%. So I love it. I really like this stock. PE of 4. That's really low PE ratio. I wonder if I can see more of that here and there, like statistics. Where's the PE ratio? Oh, what else do we want to look at? So now that we're here, let's check out a couple more things that is beautiful about this stock. So I'm going to ask the chat, what number does the stock have to have? What ratio above does the stock have to be value or to be like a great stock? So quick ratio and current ratio. What does the number have to be above? If anyone in the chat, in the YouTube, can tell me who's watching this. Let's see if I can read some of these comments. Okay, I see y'all. Let's see if anyone knows the number. There's a magic number that quick ratio and current ratio should be above for it to be like great. And Buffett has this in his letter to shareholders. He talks about this number often, which is pretty cool. I don't see anyone type it soon. Might be that delayed or nobody knows it. 5? No, it's not 5. Above 1. Close. 1 or 3. No. The 1 is close. 1.5. Yeah, Anthony got it. Yeah, Anthony. So yeah, so it has to be above 1.5. So if we look at quick ratio and current ratio and we go all the way to the right, are we above 1.5? Are we above 1.5? We are. So that's beautiful. That's also passing. Like I maybe it's too good to be true, but so far I haven't found one reason that it's not passing. And I think it's fair to say that the company is very consistent. Like it's not like it just IPO'd. Like, now we have to kind of look into management and do a little more research, but all the numbers are passing. I mean, everything's looking very flawlessly. And like the Japanese market in general, like it's where you find a lot of these nets right now and like great value stocks. Speaking of, I think, what's his name? I think Monish Pabrai, if you have ticker, I think Monish Pabrai, I didn't know about this, but Evan recently told me like, hey, if you go to ticker, I already have a ticker account. You can see Monish Pabrai's holdings. So track investing gurus. If you go here to Pabrai investment funds, I think he has a Japanese stock or two. Let's see. I guess I'm not going to know because it doesn't show me the. Anyways, for those of you who don't know, the stocks that he doesn't own that are American are right here. So he owns Suntech Reality. He talks about this. It's a competition with Guy Spear that Suntech Reality is going to beat all the stocks. There's a huge competition against him and Guy Spear with the stock. Here are the other ones he owns if you want to take a screenshot. Nice holdings. I don't even know where these are from, but I don't know why I thought he owned some Japanese stocks. Maybe some of these are, but I don't know how to check the country. Anyway, those are the ones he owns. Because you can't see the ones outside of the US, you can't really see them anywhere, but you can see them here. So that's kind of fun to see. What else? So that's pretty much it on that end. That's pretty much all. There's nothing more to talk about on this one. Now I have to kind of look into management and stuff, and I think this one's like a construction, like business construction company. So here, return on equity. Here's how much the return on equity has been. 11, 12, 12, 12, 12, 13, 12, 12, 12. That's pretty consistent, you know, that's pretty good. Return on equity. So the stock, I kept saying 10%, but no, it's closer to 12%. I think its average is like 12, 13%. Return on equity on average is around 13, 12%. So that's even better. Gross margins have been kind of decreasing, but they're not that bad. Actually, they're pretty stable. 18, 19 up here and 17. Net margin percentage, pretty stable as well, kind of up and down, but stable overall. Debt to equity, we like to keep this under 0.5. That's obviously 0. Buffett also talks about keeping this under 0.5. Everything passes. Everything is passing on this stock. The only thing I kind of wish that it had is maybe on the technical analysis side, that like it was trading below the support area. But if you guys know me and you guys follow me, I tried doing this last time with another Japanese stock. I think it was called Poseidon, and the stock took off on me and I kind of hated myself. I was like, oh, I'm gonna wait for it to go to like support and blah blah blah, and like I was doing that, and like the stock ended up like 40% like a couple months later, and I hated myself for it. Never hit the same price again. So I don't know, I wouldn't play around too much. You know, the value is there. It's worth 822 net, 1,300 net current asset value. You know, it's already at a good discount. I wouldn't be fighting that one too much. I think it's a good hold. It's one of those stocks that you just buy, and if it keeps going down, maybe you keep loading up more. So my plan is to buy some. I do want to buy some. Unfortunately, I can't buy too much. And I have to kind of look at the volume, and I'll look into it. And I'm already kind of positioned with other stocks, but I'd love to buy this stock. I'm going to buy this stock. If for whatever reason over time, you know, it's down lower, I would sell one of my other stocks. Like maybe I sell Giga, maybe I sell, you know, Life Vantage, you know, something else that I own, and, you know, use the capital to load up more on this one, because it's obviously a stock that I'd feel safer with, and like, you know, it's a growing stock. You know, time is a friend of a stock like this. I think we'll continue this crazy trajectory. You know, this little run up here and downfall and then rise, you know, that could be very similar here. The little run up, downfall, and then we're gonna have this slow rise, kind of like we had here. That'd be pretty cool to see. Sometimes pattern repeats themselves. Anyways, that's it for that stock. Let's look into it more. Let's do more research. Let me know what you guys think. I think it's a great little stock. Someone said 7989. I bet you I don't like that stock. Let me see why. 7989. 7989. Let me tell you why I don't like it. Okay, that doesn't look bad. I like that. It's kind of very similar on the support-ish areas. 7989. 7989. It's the financials. It's 20 billion, so it's definitely. So if the other one was 40 billion, like around 300, this one's around 150 million dollar market cap. Then I assume. Let's look at its total equity here. Balance sheet, total equity. Yeah, but you see, this isn't that attractive, because if you look at its total equity, oh wait, this is annually. I mean, that's quarterly. Well, that's still not too crazy. Yeah, that's still not too crazy. I mean, it's growing, but it's not that crazy. I mean, we've gone from 34 billion to 47. Actually, no, that's decent. That's decent. It's a little lower, but it's there. Let's look at its total debt. Total debt is actually increasing. Well, they do have some debt. It's not too much though. Net debt. What else do we have here? Let's look at. Yeah, it doesn't look bad. I just don't know what its net, you know, current asset value and all that stuff is. Retained earnings, also growing. It does appear to be growing a little slower. Because we looked at like the total equity on the other stock, it was like more than 100%. Like this one was around 38. We said 40, right? It went from 40 to 90. This one's gone from 34 to 47. You know, the other one has. It's pretty much the equivalent of this one being like at. Let's see, 35 times 2. I suck at math. 70, yeah. It's like the equivalent of this one being around 70 billion. That's how faster the other one's growing. Let's look at, you know, shares outstanding. I'm not diluting shareholders, so that's pretty good. Quick quick ratio and current ratio. That's actually really, really good too. Debt to equity, we already saw that actually. It's pretty low. Price to book, kind of staying around the same range for a while. Oh, let me see this. Yeah, this is another solid stock. I definitely think the other one's growing a little faster, but this one seems pretty solid too. I thought I'd find something right away that I'd be like, nah, I don't like it. It looks pretty solid too. Oh, I guess it just comes down to the values, like the net current asset value and all that stuff. Let me see its net current asset value real quick now that we're here. Balance sheet, maybe that's where it's wrong. Let's see. Total current assets, we're looking at 3958. What is? Whoa, what are you doing? 3958 billion. 3958 billion. We're gonna subtract total liabilities 1275. That's kind of high. 1275 billion. 1275 billion. It's around $26 billion. Yeah, that's not that crazy, because it's trading around a 20 billion right now. Yeah, okay. So does that kind of make sense why this one's just not as attractive? Like, just looking at net current asset value, you know, the stocks, it's trading around a $20 billion market cap, if I remember correctly, and it's at, you know, its net current asset value is 26 billion. That's not that big of a difference. Let's convert this to a per share basis. It's not going to be that like huge discount. Income statement statistics, total common stock 1946 divided by million, right? 1946 million. Oh, whoa. 1946 million. 1,370. Yeah, you see it's not that far off. If we do times 0.66, it's a buy under 919. So yeah, it's a little overvalued still. And I could only imagine once we do net working capital, it's obviously going to be a lot worse, which I can actually see real quick on my phone. 1 second. I can get my bot to give me the value of its net working capital real quick. Just give me like 2 seconds. Let me see what the ticker is. This 7989 7989. So does that all make sense? Like, oh god, I can't do it on my phone. Shit, never mind. Does that kind of make sense? Like, it's not a buy once you do a discount to it. It's not growing as fast as the other one, and the other one is trading below net current asset value and growing faster. So if I had to choose between the two, obviously the other one wins. So I assume why I never came across this one was probably because when I was filtering through my stocks, it was this, that like it's not even below. It's like it is trading, theoretically it is trading below net current asset value, but it's probably not trading below net current asset, but below net, and it's not necessarily a buy compared to the other one. The other one was 1,340 times 0.66. It's a buy under 893, and it's trading at 700. So it's trading like almost $200 below, while this one's trading like 100 above, over 100 above. So hopefully you see that difference there, like why I prefer the other one. Like, but it's not a bad stock to hold, It's just the value is obviously there more on the other one. Yeah, it could be more attractive at lower levels. You're the man, Charlie. Thought something looked good. Your peak definitely is more attractive. Did you screen that? I did screen for my look, yeah. I'm thinking of the one thing I have never, ever shared in my life has been my screening process. Like what I use, how I use it, every single little thing, knick-knack that I do. Because it's super valuable. Like I think that's the most, if I can share one thing that's like the most valuable, is probably my screening thing. So I might share it, but it's gonna cost people. Like I don't think that's something I'm actually willing to give up for free. For that, like let's just say someone else has $5 million, $10 million. Like if we both come across, because when I screened for this stock, the one that I like, when I screened for it, there was only like 12 stocks that passed. This was one of them. Not this one. The other one we were looking at was one of them. But remember, it didn't pass because of how ugly it was. I think it was this one. I think this one was one that passed, but look how ugly it is. Like, I would never get filled in a stock like this, especially if we go into an hour. Like, look at this dojis. So that's the scary part about sharing like my screener and like exactly how I come across the stocks. Like I said, I think it was 22 that passed, and then I ended up with like 13 after making some adjustments. And then out of all those, only 2 of them actually like made it through, which one of them was the one we're looking at now, Shinnihon, whatever it's called. And then the other one was, let me see which one the other one was. I think it's up here. Was it this one? Oh no, it's INN. I think it was IN. No. IIN, which I haven't shared about, but in Steel Industries, this was the other one that I think like passed. That was like a big buy and like everything passed. But again, look at how shitty the volume is. Like for me, like barely passing, but look at this volume. It's so shitty. Like it's insane. If I go, and that's an hour. Like, ugh, imagine going into 5 minutes. You can't even see the chart. So this was the other one that passed. So these were like the only 2, and I think the third one that was like kind of titter-tottering was IBA. I don't. It's not a stock I would buy because it's kind of like trading high. So those are the 3 that were like recently like screaming, buy. Here, this is the other one, IBA. This one actually looks like it's breaking out. It's gonna have a little breakout. So IBA, IIIN or IIN, something like that. It's a steel company. IIIN, 3 I's, and but out of all those 3, my favorite one was the one we just went over, which is this one. Look at the volume, huge difference. So I like this one. This is where I'm at. Do you still believe in I use the Finviz screener, but there's another thing. Like it's not the only screener that I use. Like the Finviz one is you could only do US stocks. So like I do it, but you can only do US stocks, and you're also limited. So like you can't get as precise. So when I go to like Finviz, like finviz.com, and I go to like my screener, like for example, if I go here and I go to price to book, and like I want to go custom, and maybe I want like an exact number like 0.10, I can't do that. And with my other one I can. I just don't want to share any of that. So like I'm limited. So like how do I say this? When we're looking at like net stocks in general, obviously like the stock isn't going to pass if it's a 1. If it's a 1, it means that like if its equity is 100 million, it's currently going for 100 million. That's a 1-to-1 ratio. Obviously, once I start to deduct items from that means it's going to drop. So, a price to book of 1 is obviously not going to pass. So, something that I'll share with you is I lower that number. I'm not going to go into detail of exactly where I go in between, but obviously it doesn't make sense to be wasting my time with the ones so close to 1. So that's like one thing that I'm talking about, and you can't do that. Like if I just go like, I'm not going to show the exact number. I'm just going to do half, like 1.50. Like I can't do that. So it limits me. And same thing with a bunch of other stuff. Like there's other screeners out there that you can very precisely choose the growth of certain things, specifically like buying back shares. Like with Finviz, you cannot look at the growth. Are they buying back shares? Are they selling shares? You can't really do any of that stuff here. With the other one, you can, and it's global. But again, it's not something that I'm willing to share. Maybe like, I'm thinking maybe like people who would have small money under. Would you say this is a good stock? Oh yeah, of course. Yeah, I would be all over it if I had under 70 grand. It would probably be one of my largest like top 3 holdings probably, if I had under 70. Honestly, I might even bring a big ass chunk of that in that. That's a very fancy stock. I would just have to go into it more like management and trying to look at more things to make sure like there's nothing sketchy going on. But I think it's fair to trust the numbers just based on how long it's been around and how consistent it is. It's not like a recent IPO like lottery.com that like just came out, or like trying to think of another one, or like DSS that has a history of diluting shareholders. So DSS was one that kind of fucked me over back then. If we look at DSS, you can see like how much, like look how bad they screwed everyone over. Like you can see the history of diluting shareholders from 480 to 5.6 to 85 to 3. Like just this alone is massive. Just these 3 alone, and let alone this. Obviously, there was a lot more done here, but like, you know, they're still in general diluting and merging and doing all this stupid shit. So, what's it called? I don't know what I was talking about, but anyways, that's that. All right, well, I'm gonna get off now, but it was fun talking to you guys. I hope you all enjoyed that stock. Look into it more. No, I'm not gonna show anything. If I do it, like, it hurts, man, because it's gonna kill. Like, it's gonna, like, there's gonna be competition. So I think I might do it once or twice a year, where like it's just the one on, like, for the which is what I was tweeting about, like, for the first time ever doing like a one-on-one like class, like just one-on-one, and like I literally tell you exactly without missing a drop how I scan for the stocks. But it ain't gonna be cheap. Like, we're literally talking over like $10,000 probably. I'm not about to do it for like $100 or $1,000. I can't. If there's someone that has $100,000 and they use this and they make 30% off of that, that's $30,000. Because I just gave you some, you know, obviously it's different. You got like $10,000, but so, you know, unfortunately it might not work out for you like that, but you know, there's big money out there, so I need to protect myself against that. Anyways, I'm gonna get off now, but yeah, hopefully y'all let me know what y'all think. You know, look into it, check it out, and you know, we'll see how this stock does in the next within the next 6 to 12 months. Let me end the stream.